Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that while the US is abandoning its trade relationships, others are stepping up to broaden theirs. Firstly, though, the American economy created more jobs than expected in June, but steady wage gains pointed to moderate inflation pressures that should keep the Federal Reserve on a path of gradual interest rate increases this year. The jobs data had higher hiring rates in manufacturing, and the participation rate was up 0.2% to 62.9%, and average weekly earnings rose 2.7%. But even though more people are joining their workforce, they are not all finding work yet. Their jobless rate rose to 4%. In Canada, they reported pretty much the same thing. Employment growing better than forecast, a rising participation rate, wages rising 3.5%, and a higher jobless rate. The Bank of Canada is now expected to hike rates there soon. But the trade wars officially got underway on Saturday. It was tit for tat between the US and China, as it is between the US and Canada, and the US and many others, and actually virtually everyone. One practical outcome is that some commodity prices are falling substantially. Copper is down more than $1,000 a tonne since the first week of June, as an example, and a 14% drop in 4 weeks. But that just takes prices back to where they were at this time last year, such has been the run-up in the meantime. Aluminium has fallen 20% in 90 days, but again that is often unusually high and just reverting to more usual pricing. Meanwhile, European member states have given the go-ahead to a free trade deal with Japan, the world's third largest economy. Brussels said the agreement was sending a powerful signal against protectionism. If they can pull it off, it will cover about a third of global trade, involving about 600 million people. Japan itself has now ratified the TPP. Japan is a key player in the multilateral trade community. New Zealand is on track to do so too by the end of 2018. US Treasury 10-year yield is down 2 basis points at 2.82% in a slip after Wall Street closed last week. And the US 210 rate curve keeps on shrinking as investors grow increasingly wary of the future and is now down to just 28 basis points, and its lowest since 2007. The Chinese 10-year is at 3.54%, that's up 2 basis points, while the New Zealand equivalent is now at 2.84%, that's up 3 basis points. And gold is unchanged at $1,255 an ounce. US oil prices are holding at just under $74 a barrel. The Brent benchmark is now just over $77 a barrel. The US rig count has risen a few this week. And the Kiwi dollar will start today a little firmer at 68.4 US cents, which is more than half a cent up from where we left it on Friday, and its highest in 10 days. On the cross rates, we're now also higher at 92.1 Aussie cents and 58.2 Euro cents. That puts the TWI at 71.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.